And welcome everyone. I think we're live. I am sitting down today with Barry Burns. Barry's been in a prior episode of the podcast, I think episode 116. And he's back today. So what's up, Barry? How's it going today?
Doing very well, thank you. How are you?
Really good. A pleasure to have you here once again. I know I really like the anecdotes you shared in the first podcast we did together a few months back, and your story, your lessons. The first podcast we talk about, people can listen to it back, but I'd like you to introduce yourself and tell people who you are, what you do, a little bit of background about yourself.
Sure. So, yeah, I am the owner of Top Dog Trading, and I started late in life with trading. I waited until I was 8 years old to start trading. And my dad, he was a stock trader, and that's how I got started at 8. He was very passionate about trading, loved it all of his life, traded for 70 years. He started when he was 18. And so because it was his passion, I remember he used to sit me down at the dining room table of our house, and he'd bring out some stocks, we'd look at them and so forth. So I didn't know what I was doing, but that was my introduction to trading. And of course, it's evolved a lot over that. I'm 59 now, so that's 51 years of experience. And since then, I branched not only from stocks, but into Forex and futures, commodities, options. And of course, now trading is a lot different than it was back in the mid 60s. So, now I use technical analysis and software and all that kind of stuff, which my dad never really got the hang of. But so I had to have a lot of other mentors as I was coming up and as things changed in the markets. And eventually, I joined a trading club that was local to us. I was living in Laguna Beach, and there was a big trading club there in Orange County, California. And so I started attending that and got a mentor there. And he actually stopped charging me anymore. And I would go to his house, his girlfriend's house, actually, and we would trade together. And that was a really powerful experience to actually be, in the room trading with your mentor. And he was an e-mini trader, and then he's the one who ironically introduced me to the Forex markets. And then, went on and got a few other mentors, and finally ended up going out to Chicago, getting an apartment out there, hired a floor trader, paid him 5 figures, and traded with him, it was taught by him, trained by him at the Chicago Mercantile Exchange. And that was another evolutionary step in my trading, was to go, what I say, behind the screen, because the screen, the charts are really between us and the exchanges. And so to go straight to the exchange, right down on the floor, and to see what was actually happening was, wow, a real, literal eye-opener. And so worked with him for quite a while. Great guy. He was making millions of dollars. And so anyway, now, I've evolved. I continue to trade myself every day, pretty much every day, day trading and then swing trading, and also helping other traders to come up through the ranks as well.
Yeah, you have an awesome YouTube channel called Top Dog Trading. People can search it out and see. So Top Dog Trading. It's awesome. And so I remember back in the first interview, you had a quote that you shared. The quote was something like, and I'm probably really bad at that, but the quote was something like, "Successful people are willing to do what non-successful people are unwilling to do," and that was like super powerful, I think. So I'm kind of curious. After all these years of trading, do you feel like you still have a lot of work to do, or do you feel like it's kind of mastered and you can kind of just trade and keep going with that?
That's a good question. Really good question. Well, I guess referring back to what I briefly mentioned in my introduction there, trading is always evolving. So while I don't want to brag or anything, but I do feel after 51 years I've mastered trading. Actually feel pretty bad if I would say, no, I still haven't mastered it. But that doesn't mean you're ever done, right? It doesn't mean that there's nothing more to learn. So I'm still very humble about it, and new things are happening, and I'm developing new systems, always testing something new. And in fact, here just within the last year, I have come out with 2 new trading methods that I'm just doing myself right now, because I always test everything myself for a long period of time, at least a year, before I share it with anybody else. So I need to see consistent profitability for over a year, because anything can work for a day, for a week, or even a month or 3 months, but the markets are in flux, right? And they go through different iterations. Sometimes we go into its mega trends, like we've had with the equity markets now, and back before 2000, think of the NASDAQ, and it's like, didn't have to be a trader to actually make money. All you did was buy. So it's easy in those situations. So yeah, I'm still learning, and I enjoy that. I enjoy the challenge. So I've mastered, my method, but I'm always very much aware that there's always new things happening, new technology, with the global markets now. I mean, just think of the stuff we've lived through with the stock market, for example. When I first started trading, commissions were like $50 just to get in, another $50 to get out. It's pretty hard to be a scalper in that situation. Plus, you had fractions instead of decimalization. Still remember when they went to decimalization. Brokers hated it. It's horrible for them, great for us. And so now we got low commissions, we've got decimalization, so spreads are less slippage. And the futures markets, of course, the E-minis have blown up, and now spot Forex has blown up, huge international volume in spot Forex, all these different currencies you can trade around the world. So now even if somebody works, which most people, let's face it, when they start trading, they have to have a full-time job, right? And that's how most people are. That's normal. So that's a question I get a lot is, well, how can I, trade the markets? They said, well, hey, when you're working, guess what? There's another part of the globe where it's dark. And then when you get home and it's starting to get dark in your part of the world, well, the sun is starting to shine somewhere else, whether it's Europe or Asia or the US, whatever's on the other side of the globe of where you happen to live. And you can trade that now. That's huge. That's amazing. So there's never been more opportunities. And I don't know what the future holds, but there's just always going to be more opportunities. And so I think that it's very important as traders and life in general. Trading has so many parallels with just regular life and spiritual growth. And one of them is to always be adaptable. So, Charles Darwin, whatever you think of evolution, I'm not talking about it religiously, but his real contribution to science was that evolution is not about the survival of the strongest. It's not what he meant. That he's often misquoted that way. Some people say the survival of the fittest. That's a little closer. What's most accurate is to say survival of the adaptable. So the biological systems, the animals, and so forth, the organisms that could adapt to a changing environment on the globe, they're the ones who survive, like cockroaches, right? So I don't want to be a trading cockroach, but I do want to continually go with the flow of the world and changing technology and globalization of the world and all the opportunities. There'll constantly be new opportunities. And so in that way, yeah, I never stop learning, and I never want to stop learning. In fact, I just got to throw this little extra quick story in. I met Dick Van Dyke, the actor Dick Van Dyke from Mary Poppins and all that. Mm-hmm. Wonderful guy. When I lived in Malibu, he lives in Malibu, and I'd just run into him in the grocery store and stuff. Super nice. Oh, but I also belonged to the Malibu Film Society, and where he was talking one time. He did a little independent a film that was like a little 5-minute film, and beautiful, very emotional film. But anyway, he talked afterwards, and here he is. I think he's in his 80s now, and he was just starting to learn how to do himself digital animation. And I thought, that's so cool. I really respect that. Here in his 80s, most people wouldn't tackle technology like that, but he was so vibrant, his mind so alive and alert and so happy. And so to me, again, life lesson, right? That applies to trading as well. Don't get myopic. And I see this with a lot of traders where they learn something and they might become good at it, and then they just put the blinders on. That's all I'm going to do. That's good. If it's working, don't mess with success. But on the other hand, realize that the only constant is change. So you got to keep being aware of what's going on in the market. Maybe one market's doing great this month, and then then it starts. So for example, some people say, well, I got my favorite markets to trade. But then that might be because it's trending for a while. and then it stops trending. They'll go through cycles, trending and non-trending. They're like, oh, this market's no good. So you have two different people. One who says it's great, one who says it's not great. That's because they're looking at it at different times of the year. Markets are just markets. You know, they are what they are. And so the old saying, there's always a raging bull market somewhere. There's always a raging bull market, raging bear market somewhere. And that's true. So I just go where the opportunity is. And that's with everything, whether it's a market or globally or technology. So yeah, always open to learning. So that's a long answer to a very simple question.
I like that. That's awesome. I also get a lot of people asking about kind of why I keep back the same things, even though I know how to trade. But that's pretty much something you do. So you try to back the stuff for two things exactly, because you want to be prepared for when you have to change something.
Yeah, say that again.
So the reason why you keep backtesting strategies and testing things is because you want to be ready for later and have new things to implement, or why exactly?
Well, just again, always looking for opportunities. You know, it really comes down to making money. And so, like I said, sometimes the market is trending and everybody knows about trend trading, and that's great. But, you know, markets don't trend most of the time. So then we have to look at other mathematical models, like a reversion to the mean model. And when the markets aren't trending, then you can trade a reversion to the mean model, or a you know, linear regression type of model. So yeah, it's not so much that, well, again, it's really just focused on where's the opportunity now. And so I want different methodologies, different mathematical models, perhaps would be the best way to say it, so that whatever the market's doing, then I'll have a mathematical model where I can trade that. So that's pretty much it. So I'm putting together, if you will, it's almost like they say you should diversify a stock portfolio. Well, what I'm doing is diversifying trade strategies. So I have a diversified portfolio of trade strategies. So whatever the market's doing, you know, I have a way of making money out of that type of market iteration.
And I think one misconception people have is that they think they have to develop multiple strategies, but then trade all of them at the same time. While you should develop multiple, but trade them when you have to trade them. Does that make sense?
100%. 100%. That's exactly what I'm saying.
Interesting. So if you were to go back on your 51 years of trading, do you have kind of one favorite period or one favorite kind of time or anecdote or story for a specific time?
Today.
Why is that?
Today, yeah. Because of the evolution, you know, I've come a long way, and now I'm enjoying a lot of the success of the learning curve, and put in a lot of hard work, a lot of frustration, a lot of losses, to be very transparent, lost a lot of money, but, you know, as they say, you either win or you learn. So I learned, but, you know, literally I did lose money during the learning curve, and that's not fun. But I was always very good about money management. I will say that. You know, there's everyone's a little different in trading. So for me, I've always had a good balance between being, like, there's some people who are so risk averse that they can't trade because they're too afraid of losing money, and it really blocks them. So I've never been that risk averse, but I've always been very conservative. So I've never, in 51 years, I've never blown out a single trading account. So I think that's actually somewhat unusual. And that's because I did learn money management and risk management early on. So I learned that, okay, I've got my stop for a trade, and I never would move my stop. I knew where, to me, stops go where you're wrong. Okay, so I have a very clear philosophy on where your protective stop goes. In other words, you got a technical analysis setup, or whatever your setup is, even if it's fundamental analysis, I guess, but I do technical analysis. So if that pattern is broken, as soon as it's broken, then I'm out. Why? Because the reason for my trade is no longer there. Therefore, my trade should no longer be there. And so I've always been really impeccable at keeping those stops, never pulling them, never giving the market room to wiggle or move or allow for randomness. Because I mean, there is randomness in the market, but when there is, I just don't trade. So I'm very good. I would say one of the best things that I've developed is coming up with learning certain situations where I can really nail cycle highs and nail cycle lows. Now, I cannot nail every cycle high and every cycle low. No, nobody can. But I've identified the times when I can, and then I just wait for those times. And I outpatient the amateurs. So that's one of my favorite slogans is professionals outpatient the amateurs. We probably trade less frequently than most people think we do because we have learned through pain that, you're just going to lose money unless you make the market come to you. And again, making the market comes to you means waiting for your statistical probability setup that's been tested over a large sample of data. So you know that you've got the odds on your side now, so you're not gambling, and you just don't trade anything else. And that's really, really, really critically important. So yeah, I mean, having come through that learning curve, I'm glad it's done. I'm glad that's history, and that's why, right now is my favorite time in trading. Plus, I think there's, a lot of people say, oh, the professionals have an edge and so forth, and they do. They do have certain edges where they have advantages over retail traders like us, especially in the options market, where you'll still get some spreads and some kind of funny fills. In technology, I mean, I can't put together, huge fiber optic cables and all this kind of stuff to do high frequency trading. There's no way. So in that way, yeah, they have edges. So I just don't play their game. But in other ways, we do have an edge. It's easier now as a retail trader to make money than it ever has been. So because of, again, low commissions, tight spreads, as long as you're trading in a high volume market, and all the knowledge that's out there too. More knowledge now than ever before. So to me, this is the best time to be a trader. Absolutely, 100%.
That's a pretty big contrast. And I think there's a follow-up question to that by Joanne. I've seen in the chat. So John is asking, knowing what you know today, would you have picked trading to make a living, or would have that been different? Would you pick a different thing or different way to make money knowing what you know now?
What would I have done different?
Yeah, so would you have picked the same industry, the same job as a trader, or do something different?
Oh no, I'd still be a trader for sure. Absolutely, yeah. It's the best. It's not even a job. That's just the best way to make money in the world, in my opinion. I mean, I love it, and in general, I can't tell anybody else what they should do other than follow your passion. So if you're not passionate about trading, well, then you shouldn't be a trader. But since the question is being asked about me, I'm passionate about trader. I caught the passion from my dad. It was contagious. It was a beautiful thing we shared for his entire life till he passed away at 88. And I still, crazy thing is, I still love trading to this day, even after all these years. And so on top of that, I mean, that's where you start, right? Quality of life is everything. And then number two, just as far as a money-making opportunity, I think it's a fantastic business. I don't have to work for a boss. I don't have to depend on the government. I don't have to, even as a traditional business, I wouldn't want to set up a traditional business because you got all the details of all the regulations, and you got to deal with government paperwork and all the record keeping and dealing with vendors and customers. And oh my gosh. And now that's gotten harder than before. It used to be easier to run a business. Now I think it's the hardest it's been with regard to those logistics. Now, on the other side of it, it's easier in the sense of marketing because we have, the whole world as our potential audience through social media and the internet and all of that. So that part's easier, but governments have made it more difficult for us. They put more regulations and roadblocks, and regulations are great when they counter abuse, but I think governments have gone overboard now, and now it's just so much harder. You got I actually did a seminar a couple of years ago, and I asked people who owned their own businesses, how many of you spend more than 50% of your time doing activities that do not directly make you money? And about 80% of the room raised their hands. That more than 50% of the time they spend on their business does not directly make them money. Well, in trading, I mean, 100%, right? There's no, I mean, maybe like 95% of what we do, taking trades, directly results in making money. So, and yeah, got to do my taxes and all that stuff, but it's pretty simple. So, yeah, and then you got the freedom. You can travel, you can take your laptop and travel around the world and trade, or you don't have to trade some days if you don't feel like it. And that's great. So it's a beautiful lifestyle. I love the lifestyle. And then the potential, and disclaimer, most people do not make money trading. That is absolutely true and will always be true, by the way. But if you do make money trading, once you do master it, then the freedom, and not only time freedom, but financial freedom in the sense of there's really no one who caps your income. And there's no discrimination. Doesn't matter if you're male, female, black, white, Asian, Hispanic. Doesn't matter what your sexual orientation is. I mean, none of that matters. No one's going to hold you down. The only person who will hold you back is yourself. So I love it for that as well.
Yeah, big lesson right there. The thing with trading, Joaquin, is that people can get into it, but then don't know what to do, or they're kind of misled by what to do. So I know we talked about this before a little bit. People don't do the right thing, or they're misled by different information. So what are the common things that people hear that are wrong, you believe, or that should not be applied this way in the market?
Oh boy, where
That's
do
going
I?
to be a long list. I know it's going to be a long one, but
It's funny, yeah, because it is a long list, and I'm actually going to be creating. This is not promotional because I haven't done it yet, but I'm actually I've got it on my to-do list to create a little ebook on exactly those things. Here are all the misconceptions of, and it's from years and years of hearing from traders and having students and seeing where they're going, where they're being misled, the things they focus on that they shouldn't, or stuff that's just like you say wrong, you know. And then a lot of them though are things that used to work but don't anymore. So again, back to the evolution of the market. You know, the Bible of Technical Analysis was written in the 1940s. Well, back in the 1940s, dang, we didn't have high frequency trading, algo trading. Again, commissions were high. Nobody had direct access to the market. You had to look at yesterday's newspaper for what was the stock price, or maybe turn on the TV. And then you call your broker on a rotary telephone, you know, wait for your broker to answer. Maybe it wasn't available. And then, oh, he'll call you back. I mean, everything was slow, right? Slow and expensive. So my point is, while I greatly respect, highly respect the fathers of technical analysis, when they wrote that stuff, it was great and it worked. But even they would not be trading a lot of that stuff in today's markets, because the dynamic of how markets move are different. If you compare charts, that's the easiest way to do it. Look at charts back from the 1940s and look at them, you know, today. Totally different patterns. So I think that's one of the big mistakes people do, and that's understandable. You know, they think, oh, you know, if I want to learn technical analysis, I should go to the most popular, famous, classic books. It's not really a good idea. I hate to say it because I don't want to show any disrespect, but they're just out of date. That's all. They're just out of date. So, yeah.
So when you talk about technical analysis, is it kind of patterns in the market, like chart patterns, or is it indicators as well, or what does that include?
Yeah, it includes, well, it's primarily chart patterns, because indicators are just derivatives of price movement. So yeah, it's really about the price patterns, but then it does indirectly then affect how the indicator patterns are forming, because again, the price patterns are different. So yeah, reading indicators is very different now. Reading them profitably, I should say, is different now than it was. So one of the, oh gosh, there's so many of them. Like, let me just give you a couple here, specifics. since I've been kind of general. So, one of the things that a lot of people teach is to use multiple time frames. I think that's good. That's fine. That's a good option. And the classic teaching is if you're going to take a trade set up on one time frame, look at that next higher time frame and only trade in the direction of that time frame. Well, the problem is that trend is lagging. I don't care what you're looking at. Trend, well, the definition of trend, Webster's dictionary, to get real literal here, Webster's dictionary of trend is the extended general direction. All right, so if we think of that extended general direction, that means trend, by definition, is a long-term move. It's not a short-term impulse move. It's not a half cycle. It's not just one wave. And if you look at Elliott wave, for example, just to give an example, I'm not an Elliott wave trader, but they define trend as 5 waves. Okay, so that's reasonable. At least it fits the definition of the term. But trend, you don't know if you have a long-term move until after the fact, right? How are you going to know? So in that way, it's always a lagging indicator. So back to my example. So if you're going to, let's say someone's trading a daily chart, and then they're going to confirm with trend on the weekly chart. Well, that weekly chart is 5 times slower. It only gets 1 bar for every 5 bars on the daily chart. So why on God's green earth would anybody use an already lagging indicator, such as trend, on a 5 times slower chart to confirm a trade on the short-term chart? I mean, it's never going to be a timely signal. It's always going to be late to the party, 5 hours late to the party. So, that's one thing that I would say. It's, hate to call it a technical analysis heresy, but I do see a lot of people hung up on that, and it's just useless. And so why would I use anything that's useless? I got to keep my mind focused on just what's useful. So if it's useless, it's actually harmful. So that would be another one that kind of famous or infamous for is overbought, oversold levels. Mm-hmm. Not a big fan on the whole concept of overbought, oversold. So, and part of the reason, I guess, is because I lost a lot of money buying oversold levels and shorting overbought levels. And that's very, it depends on the indicator you use, depends on the parameters you're using for that. So like if you're using stochastic, RSI, these are bounded indicators. So let's just take stochastic as an example. So George Lane, brilliant man, great guy, great trader. And he knew better than this, by the way. So this kind of stuff came up after him. So it's a bounded indicator. George just put in a line into the equation that, no, stochastic's not allowed to go below 0. What does that have to do with price action, volume, acceleration, momentum? Nothing. It's just a line in the code. Can't go below 0. Why? Because George said so. Okay. So actually, stochastic is a momentum indicator. If you look at the mathematical equation, by the way, let's just be clear, indicators, that's all they are. They're just math equations. Yeah. There's nothing magical about them. They're mathematical, not magical. But on the other hand, if you think about it, well, if they're mathematical, they're actually never really wrong because math is not wrong. Now, then, of course, there's a step from there to go to actually profitably trade it, right? So anyway, the point is, if it's a momentum indicator, which it is mathematically, and it hits 0, that is now the most bearish momentum strength signal the indicator is mathematically allowed to plot on your chart. That's bearish. There's nothing oversold about that signal. And in fact, George Lane actually used to teach this called stochastic pops. So to use the other side where K goes up and hits 100, he said there's a situation where it hits 100, the angle, or K, the K part of stochastic angles back down and then goes back up right again. And he would say that's a buy signal. And he was right. I mean, he's the guy who created the indicator. He would know. But he's totally right. And I know Jake Bernstein has taught that. There's probably many others. So, they got it right. But what I see is a lot of amateurs when stochastic gets to 100 and maybe K crosses below D or crosses below the so-called overbought line. They're shorting that stuff. And one of my mentors, Ray, who I used to go and trade at his house. He called that kamikaze trading because it's suicide. If you think about it, momentum, what is momentum? Velocity times mass. So in trading, velocity is the speed of those orders coming in. So when I was in Chicago, I could literally see that in the pits. People, we've probably seen it in movies, or you can watch it on YouTube videos. All the guys, yelling, doing their crazy hand signals and all that stuff in the pits back in the days of yore. Now most pits are closed down, but to see that was really powerful for me instead of just seeing a chart. So I look at the chart, and then I'd look in the pit, and I'd be like, dang, these guys, I see Goldman Sachs, Merrill Lynch, Citibank, they're all buying in a frenzy, and we are supposedly at this overbought level. Last thing you'd ever want to do is short against Merrill Lynch, Goldman Sachs, Citibank coming in with their huge volume, right, of them and their clients and everybody else. I don't want to take the other side of their trades. I don't want to buy their yachts, right? I don't even want to buy a yacht for myself, let alone them. So what I realized was, oh, that is a bullish momentum strength signal. So there are situations where you can have, I still hate to use the term, but overbought, oversold, but it has to do not with bounded indicators. It has more to do with mathematical statistical analysis. And that's one of my trades, the rubber band trade you're familiar with. That's what that is. So what you would do there is trade a reversion to the mean. And reversion to the mean trades can work very well. And you are trading essentially overbought or oversold mathematical models there. But it's not just because a indicator hit 0 or 100. So it's a little more strategic and sophisticated than that.
So I think some people didn't know this before. Now they're going to know it for sure. But some people know this, and what they want to do is they want to learn how to trade like banks, like Goldman Sachs, like Merrill Lynch. So is it possible to learn how to trade with, like banks, or do you have to kind of develop your own way to trade instead?
Yeah, that's like I said before, the big institutions, they do have some advantages over us, and we're never going to have those advantages. So yeah, I wouldn't try to trade like them. That's not, I just don't think we really can. We don't have the capital. We don't have the technology. Heck, most of them, I remember back in the olden days, I'd go into a trading room, like a prop trading firm or something like that. And you'd see all these guys with computers, and they're all sitting there trading, right? So just a couple months ago, same thing, except I was talking to the guy, and it looked the same. But he said, no, none of these guys are trading. And all these computers, all these people in front of them. And not one of those human beings was a trader. All the trades were based on algos. And the guys sitting in front of the computers, they were just there to be human monitors, if you will, to make sure that nothing went wrong with the program, there weren't any computer glitches, whatever. They were like a backup plan to the technology. None of those guys knew how to trade. None of them were traders. Now, to me, that'd be the most boring job in the world. But anyway, I can't do that. You can't do that because, you got to figure these huge companies, they're not trading, $49 Forex robots off of JV Zoo. They are.
I hope not.
Thank you. Exactly. No, they're going to MIT and Stanford, and they're hiring mathematical geniuses with PhDs in mathematics who can do option Greeks in their head. Man, I'll never be able to do that. And then they're not even traders, but they hire them because they have that skill, mathematical genius, or not even that. They might be technology geniuses. They don't care the guy doesn't know how to trade, but they know technology. And so they can get that order in, literally nanosecond. And it's a race to technology. And so they're hiring people who can help them get a nanosecond of an edge. Man, I can't play that game. None of us can. No.
Nice. So we had a question from Ernesto here, who was asking, which education do you recommend for beginners? Where should beginners learn trading?
Oh, it's a good question. I would just start with all the free stuff you can get. I mean, seriously, there is so much free information now in the world and on the internet and in books. I would not buy a expensive trading course right away. No way. So get all the free stuff you can get. You know, I mean, it's all over the internet, or you can get, you know, a nice basic book if you want to spend a few dollars, like Technical Analysis for Dummies, or Stock Trading for Dummies, or Forex for Dummies. You know, the Dummy series is really, really good. They're really good at organizing things, and they've just mastered how to communicate at a very basic level.
Yeah, and I
So
think if I'm not mistaken, you co-authored one of those books. If I'm not mistaken, right?
I did. I didn't mention the title of mine because I didn't want to be self-promotional, but yes, I
Yeah,
wrote.
but people that want to read it, I think it's called, which one is it? Swing Trading for Dummies.
Mine is Trend Trading for Dummies.
Trading. Nice.
Trend
Cool.
Trading for Dummies. So I'm the author of the book. But yeah, but that one, by the way, I'll be very transparent about that too. That one I would not consider a book for beginners. That's more intermediate level. So yeah, look for a beginner. Technical Analysis for Dummies is good. I've read that one. But yeah, just look for one of their more beginners, or just go online and learn all you can. Now, so that's a great place to learn like the terminology, become familiar with all the words that are being used, all the basics, and then kind of experiment with some stuff. Definitely do not start trading with real money. Oh my goodness, that'd be the worst thing you could do. You will lose it. That's like, if there's any guarantees, you know, there's 3 of them in the world: death, taxes, and if you do start trading with real money as a beginner, you'll lose money. That's the 3rd new guarantee in the world now. So why do it? Why do it? That's the most expensive education you can have, because it is a guarantee. So yeah, I would say start there and learn all the free stuff. You probably still won't make any money, but at least get that beginner's education, right? Get that foundation. And then when you understand all of that, you can start playing around with some things on simulator or a demo account. Again, another huge advantage we have today that we didn't many, many years ago, that you can actually get out there and execute trades in real time without risking any real money. Get a feel for it. And if you decide, you know, now you might be able to become successful on your own. Most people can't, but can't say nobody can. But if you don't, then you might want to invest at that point in a professional trading course. But the best way to do that, that's another question that comes up. Well, you know, how do I know which course is right for me? And that's a really great question too, because it is hard to tell. So the only way that I really know, looking at someone's track record is definitely not enough. Because either, well, there's so many things on that, but just because they're making money doesn't mean you will, okay? And their style may not fit you, your personality. That's another one. Plus, who knows? Their trading record might be bogus. We don't know. They might be experts at Photoshop and not experts at trading. So,
I like that.
So what I would say there is, again, go with, you know, hopefully go with an educator who will give you access to free education from them, so that you can start to get a feel for, okay, this person's approach to trading, does it resonate with me? And then the other thing is their teaching style. Some traders are great traders, and they're horrible teachers. So you shouldn't learn from them because they don't know how to communicate. Frankly, my dad was a great trader, and love you, Dad, but he was a horrible teacher. So that was not one of his skill sets, that's all. So it was tough learning from him. You know, it really was, because he just didn't have that capability, that skill, that talent of communicating. And he already knew so much that he knew more than he even knew he knew. You know, so much of it had gone out of the subconscious level with him that he wasn't even aware of all the stuff that he really knew. So that's part of it too. You know, test out some free stuff from individual traders. See if it resonates with you, both on a strategic level and on a teaching level, teaching style level. And if it doesn't, good, try someone else. And when it does, then great, make your investment with them. But I would say, you know, depends how much, you know, people ask me timeline. That's always very hard, because it depends how much time you're putting in, like daily or weekly, within that timeline. So people say, well, will it take me, you know, a month? I'm like, no, what I can tell you, it's going to take a lot more than a month. Or, you know, I think one of my friends who is a huge teacher, and has taught so many people, he says he finds the average trader to get them profitable, it takes about 3 to 5 years. So just to create some realistic expectations. And some people do it much faster, and some never get there. But I think, you know, if you take or treat it like a college education, I think you're in the right mindset. You know, kind of go into it thinking, all right, it's going to take me about 4 years, and if you do it faster, fantastic. But it is a profession. It is a profession, and that means you're going to have to treat it just like any other real profession, because this is a real profession. It is. I don't like to really say it's hard, but it's definitely not easy, and it's deceptively difficult. I know when I first started getting into technical analysis and all this stuff started getting computerized, to me it looked easy because everybody shows you the charts, and of course hindsight's always 20/20, right? So I'm like, oh, that looks easy. And then when I went in there and started actually trading, like, dang, this doesn't look like it looked in the book, you know, or in the book it worked, but now when I do it, it doesn't work for some reason. So it's deceptively difficult, I should say. It's deceptively difficult. And you got to learn the nuances. They're and this is why it's hard to learn everything online for free, because the dollars are in the details. The dollars are in the little nuances, the little tweaks here and there. And that's the kind of stuff that, you know, that's the difference between losing and winning, being a non-profitable trader to becoming a profitable trader, is developing those little nuances then after you've built your foundation.
Very interesting. Who was one of your best teacher or mentor, and what were like 1 or 2 things that teacher or mentor teach you or coach you on?
Well, you know, I've had so many, and they've all taught me something different. There isn't a single one of them where I actually took their trading methodology and just traded it.
Yeah.
So I learned something different from each one, and then put together my own trading method. So, that's a good one. Well, like I say, the guy in Chicago, and he's not publicly available, so you know, he's not online or anything. Like I say, he's a private floor trader. So I learned, but in what he taught me doesn't work anymore, by the way. But yeah, to see a real professional trader is making over $1 million a year, to watch him and to actually, you know what, that reminds me. Yeah, there's a couple of guys who are like that. Actually, wow, that's a good question. Thank you. You're reminding me of some things here that I hadn't thought about for a while. You're a good host. So yeah, there was him. There was another guy, and Bob. His name was Bob, and then the third one, Ray. And with all of them, I actually, with Bob and with Ray, I actually moved in and lived with them for a little while. So to watch them trade, to be right in the room with them, trading, not through a chat room or anything, but I got to see their physicality. And what was interesting about all of them, oh, and there was another guy, Bernie, in Arizona. The more I'm thinking about it, the more it's like, this is one thing they all had in common, is that whether they won or lost, it didn't really seem to affect them very much. So it was that was a powerful learning moment. You were reminding me of it. I remembered it at the time, but now I'm seeing a pattern there between all of them. So being in the same room with them, you know, you get to see their physicality, as I said. So if they had a loss, cool, they'd look the same. If they had a win, they're cool, they're still the same. There's no big celebrations. There was no, you know, self-flagellation. It was just like, oh, that's what it was this time. And yeah, so cool as a cucumber. They didn't get no fear, no greed, no strong emotion, win or lose. And that was, yeah, they stayed very centered. They were almost Zen-like. And now afterwards, when we go out to a restaurant or a bar or something, you know, then everybody talks about the trading, and then, yeah, they might get emotional about it. And of course, then they tell all their stories. But while they're in the moment trading, it's very calm, cool, collected. And I have to say, you know what, I picked up on that. And actually, now that I think about it, the more mentors that I'm thinking of, every single mentor was that way. That was one commonality among all different trading methods, indicators, no indicators, whatever. But I would say of all the things they had in common, that was one, that they stayed very centered personally. And the other one was risk management and money management, that they focused on that more than anything. Yeah.
Was that easy for you to implement or hard?
For me, actually, it wasn't as hard as it might be for some people. And I think those two go hand in hand, by the way, staying centered and being Zen-like in risk management and money management. So if you have impeccable risk management, then you never lose so much money that it gets beyond your emotional tolerance. That's really important. So that's part of when I teach risk management and money management. That's one of the things that I talk to people. It's like, okay, we can have our, technical reasons why we get out of trade, such as I said earlier, your stop goes where you're wrong. And that is definitely part of it technically. But then there's just the mathematical model as well. And that is, okay, you should only be risking a certain percentage of your trading account so you can survive to live a series of drawdowns if that happens, which it will happen at times. And then there's the psychological component of risk management and money management, and that is, what can you tolerate emotionally? And that's different for each person. And you really got to combine all three, because some people, they can tolerate a lot of losses, but mathematically they'll be disastrous for them. So it can't just be the psychological part of it. It's got to be mathematical as well. And then there's other people who they can stay within their mathematical model, lose $5, and they're going mental and they're all upset. And I've known very wealthy people who they lose $100, $200, and they're upset for the rest of the day. I'm like, dude, you got $10 million in the bank. Come on, you lost $50, $100 today. I'm like, I know, but I hate losing money. Really? Wow. Maybe you shouldn't be a trader. You either need to learn to deal with that or do something else. So yeah, that's critical. Anyway, go ahead.
Yeah. Someone was asking about, are there any differences from back then to today in the way you trade or the market in general?
There was a turning point where I had to dramatically change my trading because of the technology and, because I've been trading for so long. So back in the olden days, we didn't have computers. When I was born, we didn't even have colored TVs. That's how old I am. We had black and white TV. I still remember the day we got a color TV. It was like, wow, this is awesome. But computer, the word didn't even exist. Computers were out there, but not for, the average person. So yeah, when commissions came down and, computers and all that stuff, and you had direct access. So that I basically had to learn trading. I wouldn't say all over again, but it was a new beginning. Yeah. So, because before I was trading, we get, the Wall Street Journal and then Investors Business Daily, and we'd look at historical charts. And basically, my dad didn't do a lot of chart stuff. He did mostly fundamental analysis. So I was trading mostly that. But then he just looked at simple charts. And he would actually get out a piece of graph paper, and he would hand draw the charts. And I learned by hand drawing charts. Can you imagine sitting down and drawing every bar? And then we put in a moving average. So he is bar price patterns, 50 simple moving average, 200 simple moving average, and volume. And so from the technical analysis point of view, that's what I was brought up. But again, that wasn't the major focus. That was used as kind of a filter, if you will. So we look at the fundamental analysis, and then when we found some good candidates, then and only then did we look at the charts, just based on those very simple things. And again, it was like, okay, we're going to buy this and then hold on to it for months. There was no day trading. So yeah, when I learned to day trade with direct access and computers and TradeStation and MetaStock and all that kind of stuff, well, I had to start that from scratch. So that was the biggest shift that I had to do.
Mm-hmm. And how long did that shift take? Was that like a shift of a month or more than that? Because I guess like it's the same. Because you probably had the mindset before, so you knew how to react, but you didn't know exactly what to do when. Probably.
Yeah, yeah. Because day trading, it has a whole different psychological impact as well, right?
Mm-hmm.
So yeah, no, it took me, oh gosh, so long ago. But I would say to be consistently profitable took me more than a year after making that shift.
That's a good shift. That's pretty interesting. And do you have was that kind of your worst year because of that change, or did you feel like you had a bad year in trading that like things really didn't unfold as you expected, and then you had to evaluate and work better or work harder?
Yeah, I never have had a horrible year. Like I say, I've never blown out a trading account. So to me, that would be a horrible thing. But I don't think anyone should ever blow out a trading account. If you're taught money management,
Yeah.
then you will not blow out a trading account. So I'll tell you about one of the worst trades that gave me a learning moment and that I made a shift. So I was visiting my parents one time, and this was right before Christmas, and I was trading a tech stock, and woke up, swing trading. So I woke up the next day, and it dropped 50% overnight on some kind of news. I don't even remember what it was. Doesn't matter, right? When it drops 50%, yeah, you might want to know what it is, but either way, you lost your money. Doesn't matter what the reason was, you still lost your money, regardless of the reason. So it's nothing I could have anticipated. It's just overnight news came out, and bam, the markets just opened up 50% down, or the stock did. So that hurt, but at least I had the one part of money management I had in place was that I didn't have all my money in that one stock. So that hurt. I think I did have a drawdown of like maybe 10, 15% of my trading account on that one trade. So that hurt, wasn't disastrous, but I was diversified among other stocks and other industries and other sectors. So I had already learned that. But what I hadn't learned was how to hedge the position. So I had a protective stop in. I had a hard stop in, but the market just gapped below that stop. So again, it wouldn't matter if it was a limit order or a market order. It was a market order, by the way, but it wouldn't matter either way. If it was a limit order, well, it wouldn't get filled. If it was a market order, which it was, it did get filled, but at the lower price. So I didn't get filled at my protective stop level, which at that time I was thinking, oh, great, I'm willing to lose this much. Well, the market said, we don't care what you're willing to lose. You're going to lose more today. So then I never really learned options up to that point. And so then I looked into hedging position with options, and that literally right after Christmas, came back to LA January and started studying options because I said, yeah, I don't want that ever to happen again. And it hasn't happened since then. So now when I'm swing trading and those kind of positions, I'm hedging with options. And a lot of times I'll just take pure option plays so that I don't have to depend on an execution stop. It's built right within the statistical model of the option strategy.
Interesting. I like that. And so you were able to recover from that drawdown pretty fast, or that took a long time?
No. That again, not so long ago now. It's hard for you to remember the details. I don't remember the details because, it's a long time ago. But, I just never really got hurt. I wasn't happy, but it didn't ruin my Christmas or anything. So, I don't know. I'm a pretty easygoing guy in general. And, at that point I was I've always diversified my income as well, by the way. This is another important thing. So, in every professional trader I know, at least, we all take money out of our trading account at a certain point. This is another part of money management because the markets are always risky, right? We can never eliminate the risk. So once we build it up to a certain point, then we'll take a percentage of those profits, get it out of the market, and put it into something else to diversify even further. So I've got investments in real estate. I invest in other businesses where I'm a passive investor in that business and different things like that. So, account goes down 15% overnight. Yeah, that's not fun. But hey, I got all these real estate holdings. I'm invested in these other businesses. So it's I'm still going to have a good year financially overall. So,
yeah. And part of the mindset of a trader, I think you need to have, is to be able to not focus on the losses, but focus on kind of what you have to do now instead, which is what you did pretty much.
Very well said.
Okay.
You are 100% correct. I wish everybody knew that. Hopefully they will after seeing this. But yeah, that's right. Don't really focus on your winners or your losses. Just focus on your trading methodology. And, you know, as long as you're doing that, you're good. So like on my trading logs, oh, this is cool. I can actually show you my trading logs here. So I got them right here. Let's see. Can you see that?
Yeah,
that's
good.
That's my trading log. That's what it looks like. People can take a snapshot of that if they want. So anyway, in here, I don't know if people can see this or not. Oh, okay. I'm on the main screen now. So there's a place here where I write down what I'm thinking, what I'm feeling. Okay, and so that is keeping track of my internal, so I'm not just trading the markets, I'm also trading myself, my own emotions, my own thought patterns. So I'm trading, yes, price patterns, definitely, but I've also learned over time that, you know what, I have patterns, thought patterns, emotional patterns, and I keep track of those because I've noticed, for example, when, well, this was one that used to happen, doesn't happen anymore, where I'd say, oh, this market can't go up any higher, right? And so I write that down every time. And by the way, this is just a daily log. And after each day, then I'll transfer that over to a weekly log. And then after the week, I'll transfer it to a monthly log. So at the monthly log, I can just look and see those patterns of thoughts and behaviors and feelings. I mean. And I started noticing that whenever I had that self-talk, oh, this can't go up any higher, 90% of the time, guess what it would do? Go up higher. So now I reverse that, and I'm watching that internal talk. And anytime I find myself thinking, oh, this can't go any higher, I'm like, step away from the mouse, Barry. Do not short this. Or heck, maybe I'll buy it. It depends on, you know, the situation. But I'm definitely not going to short it just purely because, oh, I know myself. And I know every 9 times out of 10 when I think this, it's going to go up further. I lose. So, you know, that's another little thing here that I think is very helpful for people. That psychological part of trading is not just, is to get to know thyself. You know, they say mastery is all about knowing thyself. And a little Matrix reference, if you remember the movie The Matrix, the first one, where Neo goes in to see the Oracle. And he's going there to try to find out whether he's the one. And if you look carefully in the movie, the doorway that he walks into, where he walks into the kitchen to see the Oracle, over the top of the doorway is a plaque, and that plaque says, know thyself. And there's an old saying that the foundation of wisdom is self-knowledge. So that's what I'm doing with this. I'm developing a self-knowledge in my trading, right? I'm getting to know myself and my thought patterns, because trading in general is very counterintuitive. And this is, I think, one of the things that makes it so challenging for human beings. Yeah, like who else is trading? My dog doesn't trade, my cat doesn't trade. Although my cat did step on my keyboard one time, she did take one trade. It actually was a winner, so it's like, oh, thanks, but don't do that again. But anyway, I like to throw the little tidbits in there, hope you don't mind. But trading is very counterintuitive. And I actually wrote an article many, many years ago saying good trading must be, or no, good trading must feel unnatural. Must feel unnatural. And the basic premise of it is this. We all know that most people lose money. And that's because, well, part of the reason is that social beings are, or human beings are social beings. So we have a herd instinct. So if you think about that, if most people lose money, most people are doing the same thing, following the same gut feel, same thought processes, same self-talk, same emotions, and that is going to lose us money. Trading is very counterintuitive. That's the challenge. You've got to overcome yourself. You've got to conquer yourself. You've got to go against your literal human instincts. That is why I do this. That's why I keep track of that. And so people who just trade by, you know, guts or, you know, well, I get this from students all the time. Well, this looks like it's going to go up. And I ask them why. They're like, well, no, it just kind of looks like it's going up. Okay, that's not a good reason. It just kind of looks like it's going to go up. Really? Okay, if you were a trader at Goldman Sachs and your manager came over and said, Mary, what do you see here? Well, it just kind of looks like it's going to go up. Mary, you're fired. Seriously? You think Goldman Sachs is going to settle for that? You talk about, can we trade like, the institutions? They're very disciplined, right? Yeah. They monitor every single trade, every single tick. They're just amazing at that. That's one thing we could learn from them, is to document as detailed as they do. But no, so if you're trading by instinct, now, there's always an exception to the rule. I have met one guy in my life who was a natural trader. And he would just come into the trading room we were at that time. He'd always come in late, drive his he had some kind of a convertible roadster, I forget what kind it was, cool little sports car, all black interior and black exterior, black on black. And he would just kind of strut in, and he'd trade for like an hour and make $10,000, and then he'd leave. And the rest of us, including myself, because I'm not a natural trader, we'd all be like, dang, how does he do that? And the guy who owned the trading room said, you know what? He's just a natural. He said, I've seen like maybe 3 of them in my whole career. But he says, I really got nothing to teach that guy, because he's just one of those rare, really rare people that he said, don't plan on being like that guy. You're not going to be. That's just, he's got a thing that just comes natural to him. And it's not duplicable.
Wow, I love that. Can't believe we're already 1 hour in. So, what can people find you if they want to connect with people after this video or podcast?
Yeah, so let's see. Well, topdogtrading.com is my website. In fact, I'll type it in here. If I type it into the chat box, can people see it?
I'll have to post it, but yeah, you can type it here. Yeah, sure.
Okay. So, okay, there we go. Oh, and then, yeah, I do have I talked about free courses. So I've got a free course that I share with people. And we'll make this real easy. We'll just add the word free after it. So topdogtrading.com free. And in my free course, what I like to do is, I give people not only theories and a little bit about my trading methodology, but I actually give them a free trade setup called the rubber band trade. So, because again, that's how I think people should decide on a trading teacher. So rather than just learning about methodology or how I teach, I say, you know what? Here's a free trade setup, the rubber band trade. Take it, test it, email me if you have any questions about it, because it does work. I guarantee you, I take this thing all the time. So I know it works. And if you're not making money with it, then there's a reason for that. So contact me, because I want you to start making some money. And so that's my goal, is to actually help people make money before they buy my course. So they may make money and then choose never to buy my course, and that's fine too. Whatever.
Love that. And you're also on YouTube, Twitter, Instagram, I think. So people can follow you there if they want. And you have a lot of good content, which I really learned a lot from, even on YouTube a lot. So that's awesome.
Well, thank you very much. Yeah,
go ahead. Sorry.
Yeah, most active on YouTube. I just started on Instagram. I've got like 4 posts on there. Twitter, I'm pretty active, but YouTube's probably the best. We're here on YouTube right now. So yeah, people can just go into the search bar for YouTube, type in Top Dog Trading, and they'll find, I believe there's over 150 videos there from me now. And they're all tutorials, and they're quick. They're like 10-minute tutorials. I put out one every week, and yeah, invite everyone to go enjoy and hopefully learn some good things. And if you like it, share good things with good people, share it with others as well.
It's awesome, man. So Barry's rubber band trading method is linked below. We'll put his email, we'll put everything after this is done. And thank you so much, Barry. I appreciate it. I just want to ask you one last question. So what would be one action step people can apply, let's say this week or this month, to become better traders? Anything you have to recommend them absolutely to implement?
I would say, I briefly mentioned this, but I want to emphasize it. Because what I find is that a lot of beginning traders, amateur traders, retail traders, whatever, anyone who's not making money, and they're in the learning curve. By the way, that's no disparaging tone to that at all. We all go through that, right? We all start out as beginners. We all start out at 0. So as you're going through your learning curve, I would say the one big thing that I find people making a mistake with is going from one trading method to another, or trying to find, trying to find the holy grail indicator. Everybody gets so obsessed with trying to find the magic indicator. Okay, so my friends, that is not the answer. That is not the answer. So do not, the actionable step is not to, find the magic indicator this week or, whatever. No, 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 no. If there's anything that you should be working on right now, you should be working on learning money management and risk management. And I would phrase it this way, as a question to everybody watching right now. How much time have you spent roughly exploring different indicators or exploring different trading methods, whether it's price patterns, moving averages, whatever? Let's just, in general, talk about that. Okay, let's say you've spent 40 hours on it, maybe you spent 6 months on it, maybe you spent a year on it. Now, opposed to that, how much time have you learned to put into learning money management and risk management? For most people, it's close to zero. And they've got it exactly upside down. Every professional trader I know, number one is money management and risk management. Learn that stuff inside and out. Otherwise, no indicator, no price pattern, no candlestick pattern, no moving average is going to help you, right? It might for a while, and those things can be good. I'm not saying they're bad. You can put a combination of things together that'll give you a probability scenario. Those things can all be very helpful. But unless you have impeccable risk management and money management, you are going to lose in the end. You will not survive. So that's what I would encourage everybody to do right now. Focus on that, learn that, go on the internet, learn everything you can, learn the mathematical models, learn about drawdowns and, all that stuff, because that's where you're going to live or die over the long term.
Powerful, powerful. Thank you so much, Very, for joining me today. It's been a pleasure, and people loved it. So thanks, guys, for watching. We appreciate it, and we'll catch you back here tomorrow. Ciao.
Great. Thank you so much for inviting me. You're a wonderful host, and I've enjoyed it. Thank you very much.